Deal Surgeons, Elite Masterminds, what's going on? This is Diamond Life, just doing a loss review. This is the glitch in the matrix. I took advantage of most of this move, but I did take a loss initially, and I want to break that down and why I messed up. Okay, I'm going to take the annotations off. So the draw on liquidity, the glitch in the matrix was down here. This is the draw on liquidity for the week. Okay, if you look at the bottom, it says Friday, and it says Sunday. So you can imagine an imaginary line right here. This is the week cutoff, okay? And so the draw on liquidity was very clear. We had a long wick on the weekly, as ICT teaches that we look at the weekly chart to get a projection on where we think the draw on liquidity would be. So I put number one here. Draw on liquidity would be consequent encroachment of a wick. There's a long wick on the weekly chart. I also should have put 75% of consequent encroachment of that wick, which would have been down here. And then price came down here close to the draw on liquidity for the week, which is a wick low. And it did a rejection block, meaning it went right up under this bearish candle, which you can barely see, and then it took off. So the glitch in the matrix is down here. It was guaranteed to come down here based on what I've been blessed with the glitch. So I took off something here. It retraced. I was in drawdown like a mug, but the account did not blow. And the reason why I held the short, even though I was in drawdown, I actually went short again here. Based on the way this glitch thing works, whatever the high is or intermediary high for Friday is, it will not take it. As you can see, it came up here, almost took it, but it did a rejection block on this white candle right here, which you can barely see. And then it reversed down because it had to come down here. It had to fulfill the glitch, which was this purple box being filled in. This is the first target here. Also, it didn't fulfill the draw on liquidity as well. So that's why I was thinking when it started going up like this, I'm like, what the fuck is going on here? Like, it has to come down here. I mean, I back tested this 20 weeks, and now I'm about to go another 10 weeks. Sometime between now and Monday or next Tuesday, I'm about to go back in the future and track all this another 10 weeks. So I understand how this works, but I'm like, and the draw on liquidity was down here, and the glitch said it had to come down here. And exactly what it did. It came up here, faked you guys out, making you think this is a bull flag, and it shot down to fulfill the market structure, which was the draw on liquidity, which was the last week's low. It was very clear if you look on the weekly chart. And the glitch said it had to come down here. So it was pretty interesting, but I was in drawdown. But let me explain how I took a loss. Okay, and then I'll end the video. And take off some of these annotations. Hide. Okay, so let me break this down real quick and then I'll end the video. Thanks for watching. I got ICT up here watching this last video here.
You sit still and you watch and see what would have happened if you did that. What's that tip?
Okay, I always listen to ICT just to get it in my deep subconscious. Anyway, so let's go here and let's check this out. So the reason why I messed up when I went short is here. This is a 1 hour chart. This is where I messed up at. Right here, when price was pushing down. Hold on, Tuesday. No, it was here. Hold on. Okay, yeah, this is why I messed up at. Monday. Yeah, it was about right here. Yeah, somewhere right here. Like when price was pushing down right here, I actually went short. I went too short too early. Why? I should have went short when price took this low right here. But I was frustrated. I saw the glitch in the matrix. I thought it would not go to the purple box when it always goes there when I mark it up properly. And so I really was just getting a little frustrated, and I got in too early. So I got in as price was shooting down. I was like, fuck it. I just got in. And then price took off and reversed, and then I got stopped out. Okay. And I ended up putting some decent leverage on there. So then I had to get back in on a short here. And that actually was a little premature based on me taking a loss because ICT teaches not to go, just go right back into the market. But I actually went back in short here. And then when price was coming down here, it retraced up again. And then I was in drawdown as well because I went short here. But the whole point of making this video is I should have just went short when price took this low. It's the whole point. I know this is chasing price, but if you understand how the structure works, when this low was taken right here, that showed that we were coming down here. Okay? That showed that we were coming down here to this rejection block down here. And you see price over here literally took the wick and took off. See how I just went back up right here? It literally took this wick, it took this candle low down here That gray candle right there, it did that. That's called a rejection block in ICT culture, and it took off. So I got in short here and got scared when prices come up here, and I got back out. Okay, I got back out. So I made a little bit, and then when price took this low, I just was like, fuck it. I just got in short and chased price, which is not what ICT teaches, but I was just getting frustrated. So the whole point of this is I took a loss because I should have just waited for price to take this low, or I should have waited for price to take consequent encroachment, which is 50% of this wick. Okay, because if you see right here, price came down to 50, close to 50% of this wick, but it didn't take it, and then it reversed up higher. So these wicks are gaps, if you understand ICT culture. So if I look at 50% of this gap right here, as you can see, price did not take it right here. It didn't even breach it. So I should have waited to 50% of this wick or this gap, because the algorithm look at wicks as gaps. This is a 1 hour chart. I should have waited to 50% was breached, which it was here, and then went short. It retraced up here. I would have been a little bit of drawdown. And then price came down here, which is the first area for the glitch in the matrix target, okay, which was down here. And then it reversed up again because it took out a low, okay, if you understand how the structure works. It don't necessarily have to see. This is how people fuck up. They think it has to take the wick low. That's not true. You have wick low, and then you have a candle low. Jesus, I'm so glad I understand this, because a lot of people don't. You have the wick low, which is down here, and then you have the candle low, which is down here. As you can see, it came down here and took the wick. It took the candle. I'm sorry, it wick down here below the candle, not the wick low. This is the lowest low of the swing. This is a swing low. You got a higher low, low, and a higher low. Okay. And so it took off. So that's the whole point of this is I took a loss here. I really hated it because I went a little heavy. And then that price came back up here. I just got out because I thought I was wrong and it was coming up here, but I should have known that it wasn't going to take this high out based on the way this glitch stuff works. So that's why I took a loss. And like I said, I just got in here, went down there, and I got out. And then when price reversed, I held on in 10% of the position. It kept going up. And then I went short. I was chasing price here. It went short again. I got scared again. And then I was like, you know what? Fuck it. I just literally put an alert up here. I'm like, I don't have time for this shit. You know, this glitch thing works. I've been tracking it for damn near 40 days. I just need to believe what I see, trade what I see, not what I think. So obviously I put the alert up here for this high. So price came up here. This was scary when you see this wick up here. But understanding the structure, it was not going to take out this high according to the way the glitch works. And the drawn liquidity was down here for the week. It already hit it already hit wick the wick for the weekly candle, but it didn't hit the actual drawn liquidity for the week. And the glitch in the matrix is down here, so it kind of made sense. And I made the money from down here all the way down here. And then I got out at the glitch in the matrix. Okay, the purple line that I showed earlier. So that's it. I was just doing a loss review for US 30. I'll turn back on the annotations and then in the video. So here's the purple line here. This is the glitch in the matrix. And here's the drawn liquidity. So as I stated before, I knew price had to come back down here. But this was very interesting. This was very scary seeing price come up here, because you really need to make sure this shit is working the way that you project, whether you're making money or not. You have to make sure your projections is working out. And here's the drawn liquidity for the week. And so price came down here and it hit it. And this was a very clear target on a weekly chart if you understand how the structure works. Thanks for watching.